Okay, all right. I lied in the title. I'm not actually risking 50,000 on this because I'm probably going to be risking $75,000 to $100,000 in just a moment here on this trade. So here's the trade that I took. It is CHF JPY. Now, been a couple times in the past I've risked a lot of money on a really good trade, but this right here might be the biggest trade risk of my entire trading career. My name is Nick, in case you haven't known me. I have my YouTube channel here. I've been trading for the past little over 8 years. I've made millions of dollars in the forex, crypto, and stock markets trading. And in this, you're about to see me. Well, you technically I've already in. I've degenerately gambled on this trade, as some people would say. Now, there's going to be plenty of people here like, Nick, you risked this much in a trade. What's going on, man? You're crazy. This is gambling. This is never going to work. If that's you, go leave a shitty comment. Go to the next video about Warren Buffett telling you to buy the S&P 500 and hold over the next 30 years, and you do that. But for those of you who want to see why I took this trade, let's get into it. So as you guys saw in the free Telegram channel, I posted this here. CHF JPY are looking so painfully good. Glorious day in the markets. I shared this setup here yesterday in my free Telegram channel. And if you're not here in my free Telegram channel, there's 60,000 members in here right now. It's the first link in the description, or I'll probably put it in the pinned comment. You can join for free right now. Been running this channel for like the past 6 years for free. But I took the CHF JPY trade and I called this out in my private group, my little sexy private trade group where I take these trades. Here's me calling this trade out last night. So here's where I entered right there last night. This is a screenshot. But you can see here at 8:39 p.m. I called this in the MFX Knicks Trades group, my Discord server where I call it all my trades. I put here's the markup on CHF JPY. It's gone higher highs, higher lows, higher highs, higher lows, higher highs. Now it's just made a new higher high. I just think it's going to drop. So I've elected to enter immediately, putting a stop loss there and a target down here for a 1-to-1 risk reward ratio, risking $50,000 on this trade. Here's my entry with where I entered. Here was the entries last night. You can see the exact entries. You can see what happened later on in this video. So I'm going to make this video. There's going to be a couple weeks, months go by. You can go look back in time at what ends up happening on this. Here is my entry. Here is my stop loss. Here is my target. If you're going to at me in the comments and say, oh, Nick, the trade didn't work out, blah, 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 just make sure that you know there's my initial entry, there's the stop, there's the target, and this trade could be closed far before it gets to the target and far before it gets to the stop loss. It just kind of depends on the context, but that's the planning of this trade. And really, it's really, really simple because I've just done the same thing over and over again for a very long time, like buying when I think it's going to go up, selling when I think it's going to go down. You can see I'm short CHF JPY, the entry, stop, and target are all shown in the image above. These right here. And then you'll see I put I am risking just under $50,000 on this trade. I think it's like 48K or something like that, with an 11 standard lot position. If you'll be taking this trade, remember to control risk. I woke up this morning and it started going into some drawdown right here. You can see it was in a negative $5,000 drawdown. And then since then, it has continued into more beautiful drawdown. Now, I'm one of the few people that gets really excited when a trade starts going into drawdown. You can see right here, it's a negative $10,000 drawdown. This is the... That's the entry. Oh, that's going to be really hard for you to see, but there's the entry right there. It's like, I know it's inverted because it's like reversed on the screen because this camera thing is mirrored so you can see my face properly and it accounts for which direction I'm moving. However, I'm excited this goes into drawdown. I told my clients in the Knicks Trades group, I said, y'all, if you're religious, pray that we get some drawdown. Why? Because whenever I already get an amazing entry on a trade and it goes further against me, I space the invalidations, which are just the fancy word for saying the stop losses. I space the stop losses and invalidations far enough that if it goes against me, depending on the situation, I am able to still comfortably add positions. I work behind the logic of if I think price is going up or down because it's gone really freaking far in one direction without any pullbacks whatsoever, the likelihood of it pulling back eventually is very high. That is the whole premise. I've been trading over 8 years. I've tried all different sorts of things. I've traded with support and resistance. I've traded with trends. I've traded with this and that. And if it's always been a matter of just entering when I think it's going to go up or down and then just controlling risk somehow. I've used hedging. I've used dollar cost averaging. I've used grid recovery trading. I've used martingale recovery trading. So like adding with a multiplier. I have used all sorts of different type of things to trade with the risk structure. And, it's all just really come back to like buying when I think it's going to go up, selling when I think it's going to go down. In this case, this trade has a stop loss on it. Stop loss is an easy, quick way to control risk. Very simple, very straightforward. And if you place your stops far enough at locations where price is very unlikely to go, after price has already had a big move in one direction with zero pullbacks, do you see a pullback here? If you cannot see, you need to go and get some glasses because there are no pullbacks in here. Price has gone straight in one direction. Now look what happens on CHF JPY on the daily and 4-hour charts over the past few weeks, past few months. When price goes up, it goes down, then it makes a higher high, then a higher low, then a higher high and a higher low. It just does this boring same thing over and over again. Now we've just made a higher high. I'm over here just saying, okay, usually when CHF-JPY makes a higher high, in this case, it has a nice little pullback and goes down. There's no moving averages. There's no support resistance. There's no smart money, liquidity, order block, bank manipulation, institutional Wagyu beef bullish distribution candle entry strategy. It is just freaking looking at the chart and saying, I don't know, bro. It looks like it's gone really far in one direction without a pullback. Generally, after price makes a higher high, even in an uptrend, you have a better risk structure, meaning you have a higher percentage of winning and a less chance of losing if you go short on a higher high after price has gone really far in one direction. And if it goes against me, and if I've used the invalidation far enough, right, I'm not trying to be a god and a hero saying like, oh, bro, it's going to bounce right exactly here. No, that's why I use such high invalidations. It's just me saying, hey, I think it's a very high likelihood that at some point in the near future, price is gonna reverse here. So that's why you see this right here, where it's like the invalidations all the way up here, entries here, targets here to 1-to-1. If it goes up here, right, let's say it goes up a little bit further where I'm wanting to add literally right now at 1.179. If we can get here on this call, you will see me actually do this live. It's freaking crazy because it looks like it's about to get there. If it goes a little bit against me and starts playing around, maybe it does something like that, then it goes into profit. Well, then I can close, somewhere down here. Perhaps it won't go all the way to the target at that point. Perhaps I'll just close it earlier. But if it goes against me, I'm able to add comfortably, having pre-planned it into the risk structure of the trade. With this trade, I've assumed about a $75,000 max cap risk on this, meaning if I lose about $75K. That's a lot of money, but I've allocated it and I accept the risk and I know what my stats are. 85% of the time, a trade does not result in a loss. It results in either a break even or a small profit or a medium-sized profit, whatever that means, or a huge profit in which it actually goes and hits the profit target. With me risking $30, $40, $50, $60,000 per trade with an 85% success rate and only a 15% chance of it ending in loss, that is insane. And most of the trades that end in loss are not even big losses. For example, my last loss, which has been I think I've had 4 losses in the past few months out of almost 30 trades. I've had maybe 4 losses. I think you can scroll through the Knicks Trades group if you join the Knicks Trades group, and you can literally just scroll through all the history. You can see literally everything in here. With all that being said, my average loss, the last one I had was on GBP CAD. And GBP CAD, I risked $30,000 on that trade. And I closed these trades. This was when I won. I'm sorry I win. But I closed it like a 3K loss out of a $30,000 risk. I closed it 1/10 of the way to the stop loss. That is one of the losses that factors into the 15% of trades that end in a loss. 85% of the time it ends in some sort of profit. You don't have to believe me. It's all here. This is the Knicks Trades Discord server. It's a subscription I have where people can follow my trades. You can scroll through for yourself once you get in here. I recap everything. Sometimes I will literally send audio messages recapping the trades I've taken. I will do a bunch of different stuff to just show you every single little thing I'm doing. Here's a 10-minute audio message. It literally just is freaking everything. It's you're able to get inside my head, as crazy as that sounds, to be able to see every single thing that I'm doing, and it's just really fun and it's really cool. So with CHF JPY, this is so freaking beautiful. We're 30 pips away from where we're looking to add it at 179. And again, the whole logic behind the trade is extremely simple. Okay, this is like first grade stuff. Okay, if you're here in the United States, if you didn't learn how to take trades like this in the first grade, you're really far behind. I'm sorry. But we have to start somewhere. The logic is that if price goes really far in one direction, right? Price does not just go in one direction forever, generally. I'm not talking about crypto coins during a bull run. I'm talking about a steady state market like forex or stocks or something that just is not on the daily chart. It does not run in one direction without any pullbacks regularly, right? The idea is that if price goes really far in one direction, it's going to pull back. That is the simple premise it is based off of. Think about that, right? You don't have to make any assumptions to look at a damn chart and say, oh yeah, it goes up and down. It goes up and then it pulls back and then it goes down and then it pulls back and then it goes up and then it pulls back and it goes back and forth. And sometimes it ranges and sometimes it goes in an uptrend, sometimes in a downtrend, sometimes blah, 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 blah. And you're going to have all these idiots. I swear, you go read the comment section of this video right now. You'll see what I'm talking about. You're going to have all these idiots saying, but bro, it's selling in an uptrend, bro. That's the stupid thing to do. This is gambling. You'll have people say, oh, this is never going to work. Even though I've been trading live for 6 years. There's still people that are like, there's no way, bro. It's just not that simple, man. It's more complicated than that. You have to understand the smart money concept, institutional liquidity distribution of the retail traders, and the order block liquidity gap distribution, Wyckoff accumulation, fair value, FU candlestick going up to be able to properly understand how the markets works. And I'm just here saying, like, that's not the case. Price goes up and price goes down. If you watch price over the course of a couple months and you just see, okay, yeah, price goes up, then it goes down, then it goes up, then it goes down. Whenever something happens on the chart that your brain automatically recognizes, you're able to say, wow, price has gone really far to the upside. You have the creative genius decision like, I think it's going to drop for a little bit. And if you do that with a risk structure, such as in this case, just using a wide stop loss, right? And then setting a target at wherever 1-to-1 risk reward happens to be. Context and nuance and subtleties aside, that is the basic framework. I mean, this is not that you literally don't even need quote unquote technical analysis. Okay, we don't need trend lines. We don't need moving averages. We don't need Fibonacci retracement. We don't need the RSI. We don't need the stochastic oscillator. You don't need my French bulldog over here telling you what trades to take. You do not need my dog Ruby looking at you saying, bro, why are you yelling? Why are you taking that trade? The market makers are wanting you to not take that trade because the liquidity of the retail distribution pattern is saying that the price is going to continue up, but you're shorting. That's a stupid thing to do. You don't have to have my dog Ruby telling you some unhinged stuff like that, because you can just look at the chart, and if you have enough experience to make your discretion relevant and to make your intuition usable and practical and functional in your trading decisions, then that's all you need. You look at the chart, you keep it simple, you control risk. If your whole idea for a trading decision can be said in one sentence, I think it's going up because it's at support. Cool. I think that it's going up because it's in an uptrend and it's pulled back. Cool. You could be like me. I think it's in an uptrend, sure, but it's gone really freaking far to the upside and just make a higher high. And even if it is in an uptrend, there's no way in hell I would buy that high. I think it's going to go down because it's gone up really far in one direction for an extended period of time with no pullback. So I'm going to sell. I'm going to use a stop loss far enough to where it's very unlikely to get hit. And I'm also going to give myself a little bit of room to assume a little bit of additional risk on the trade because I pre-planned it, right? I knew this initial entry was almost $50,000 of risk, and I pre-planned for an additional $25,000 to $50,000 of margin should the price go against me. My margin chewed up on this trade is very small relative to the account balance because of how big the invalidation is. If you look at the actual margin that's chewed up on this trade, even in drawdown, it's only $60K. The account has over $300K in it. I have another $250,000 of margin that I could use to add to this trade should it continue up here to 1.79, which it is almost at. And that's where things get exciting. This is why when you truly like flip trading on its head and you're getting excited that you're getting into drawdown, it sounds delusional and you'll have people make fun of you. And some people will even say that you're insane and that you're a gambler, but none of it matters if it works. What works for you will be a result of your experience. And an iterative process over time of you combining that experience, mapping it onto the freaking reality of what trading actually is, looking and saying, okay, generally when price does this, that's what happens after. And then you build up this side of like this sexy, this little discretion, this little intuition where you're looking at a chart. All your friends are saying, hey, bro, the institutional order block, ICT candle bullish engulfing stick just occurred. So we're buying, right? But then you look at that and you're not an idiot. You've been trading for years and you've seen the same shit happen over and over. And you're like, I don't know, bro. That doesn't really look good. For some reason, I'm feeling really weird. And then they're like, well, but why, bro? On the minute 15, it's a perfect setup. But then you're looking at the 4 hour or daily and you're like, I don't know, dude. On the daily, this thing is like really, 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 really overextended to the upside. Do you really think it's a great idea to be buying right now up here when it's way the F up here at like, it's gone in one direction with almost no pullbacks. It's gone like almost 1,000 pips. Look at that. That's literally insane. Okay. Here's the takeaway from this video. Trading is very discretionary. It is based on your intuition. And I think that instead of making everything really mechanical, you can find trades through very, very simple logic from just simple experience. Now, how do you get this experience? Just learn, just keep trading on a demo account, taking whatever the hell trades you want over the course of a couple months. Usually 6 months to a year, in my experience, is what is a great starting point to start developing that intuition. This shit is not going to happen in one day. It's not going to happen in 1 week. It's not going to happen in 1 month, and it probably won't even happen in a couple of months. In my opinion, not financial advice, just my opinion, just saying. Trading is risky. Most people lose money. I think that 6 to 12 months is a good starting point, as long as people are using a demo account, so there's no actual fiscal risk. They can use a demo account, get 6 to 12 months of experience, seeing what happens, what they do. Okay, if I do that, that's typically a bad idea. But if I do this over here, that usually works out a little bit better. You're able to put together this very sexy system of yours where only you get it, right? And your intuition is able to dictate trading opportunities for you. Then you get to the point where you're like me, trading over 8 years, yelling at people in YouTube videos just like this, sharing your screen, showing people your actual trades, and having called your trades live for the past 6 years of your trading career. And this free Telegram channel, I have run this channel since the summer of 2018. There's 68,000 members in here, and I've been running it for the past over 6 years now. It's truly insane, because all I've really done is I buy when I think price is going to go up, and I sell when I think price is going to go down, and that's pretty much it. I've always had a risk structure. Sometimes it's been stop losses. Sometimes it's been an approach like hedging and dollar cost averaging and grid recovery and everything like that. But there's always been, like, the reason for the trade is because I think it's going to go up or down. And the risk structure has always been something to control risk that I'm comfortable with and that I accept what the stats are. Sometimes it's just putting a small deposit into an account, going very high risk, fully understanding that the account could blow, and that's okay because you just put a small deposit of your total trading capital. It'd be like if you have $100,000 and you're like, I'm going to risk 10% of this trading capital. So you put 10% of it into an account, which is $10,000, and you just do really high risk to try to grow the account. If you blow the account, it's not a big deal. You've got 90K left to trade with. You've only lost 10% of your trading capital. That sounds insane to some people, but it all depends on you and your risk tolerance. Keep things simple and control risk in such a way that reflects your risk tolerance and what you're comfortable with. In this free Telegram channel, I share my trading ideas and trades and all sorts of stuff every day. You can see my setups I've shared last night with yellow lines. This is how high production quality my trading analysis is. An MT5 terminal showing my previous trades, as well as showing yellow lines for where I'm looking to probably enter at. This was last night on CHF JPY, and this is Euro CHF. If price continues down, I'm going to be looking to buy here. But yeah, I share my analysis and insights here. If you're not in this Telegram channel, you should join it just because it's literally free, and it takes you, like, I think maybe a grand total of 5 seconds to join if you click the link in the description, or if you click the first pinned comment that I put in the description, in the comment section of this video. It's a great resource if you're trying to learn. And with that being said, that is why I sold CHF JPY, and that is why I've elected to risk 50,000, perhaps by the time today is over, $75,000 to $100,000 on this trade. It's because the likelihood of it working out is very high. The likelihood of it not working out is very low. And on top of that, I'm comfortable with the risk. If I lose 75K on this, that wipes out a couple weeks of profits for me. I've made like close to $180,000 over the past 2.5 months trading. It's not that big of a deal if I lose like 50K to 75K on this. And that's if I add and it goes all the way to the stop loss. How likely is that, right? Just for context, in the past 4 months, that has never happened. In the past 4 months, I have not had a trade actually go to stop loss before I've been able to manage and get out of it. Most of my losses are partial losses, and most of my winners are bigger than those partial losses. Not every trade I get hits the profit target, and not every trade I get hits the stop loss. In fact, almost no trade I take actually goes and hits the stop loss because I put them in such ridiculous areas where they're unlikely to go to. If more people focused on looking at a trade before they entered and asked themselves, like, okay, how likely is this to hit the stop loss? Do I think this is an intelligent thing to do? Or would it be better to just simply sit the F back and wait for a better trading opportunity where I thought it was less likely to hit the stop loss? If more people just passed on trades, sure, you're going to miss some good opportunities. Sure, you're going to feel sad inside. Sure, you're going to have all your friends and all these idiots online telling you, you're stupid. You're stupid, Elijah. Why would you do that, bro? Come on, Darian. That's kind of retarded that you would do that, bro. Joseph, why would you not take that trade, man? It's an amazing, perfect trade. But you, being one of these people with these random names that I've just made up, you can still say, knowing deep down inside, you're like, I'm not comfortable with that. And I would want to take trades that I'm comfortable risking a high amount on and putting my money where my mouth is and having a good risk structure on them, and everything's planned up and everything makes sense to me personally. If your technical analysis and your intuition, meaning that feeling you get, about like whether or not a trade feels weird or whether or not it feels great, if those two things do not align, the technical aspect as well as the emotional aspect, if you're not 100% comfortable from both the physical reality and your emotional reality getting into a trade, you just shouldn't take the trade. It's not worth it. It's not worth getting into a trade. And then even if it wins, you didn't risk the full amount on it because you were scared, because you didn't really feel good all the way, but you technically took it because technically the chart looked like that way. And then you have 18 other stupid idiots online saying, bro, it's going to buy. You should buy Dogecoin, bro. It's going to go up, bro. And so when you win, it's not even that great, and it's short-lived because you don't think you can duplicate it in the future. Then on top of that, if you lose, you feel resentful and guilty because you tell yourself, oh, bro, damn, I knew I shouldn't have done that. Why did I break my rules? I don't understand why I did that. I had the opportunity to not do that, but I did it anyway, and it's because you have the fear of missing out. You don't want to miss out on the trading opportunity. Look, I get it. It's perfectly fine. You need to make sure, though, that whenever you're trading, you're only selecting trading opportunities that, in my opinion, do whatever the hell you want. It's just what I do. In my opinion, taking trading opportunities that are the least likely to actually stop out and very extremely likely to hit the target, like easily. If you stopped for a second and waited for more trading opportunities like that, then you too, maybe, not guaranteeing you anything, not financial advice, do whatever the hell you want, but I think more people would get profitable at a higher percentage rate if they focused on those things. If you keep things simple and control risk, most people lose money trading because they lose money trading. If you're controlling risk in such a way where you're not losing as much money trading, you can get to the 10% of people who are not losing money trading. And then perhaps you might even be able to get into the low single-digit percentage of people who are actually making a consistent, significant income from trading. Nothing I say in this video is financial advice. I've never played God. I don't know what's going to happen on CHFJPY right now, and everything I say is just my opinion. But that being said, if you'd like to join the Telegram channel, make sure that you join the Telegram channel. And if you liked this video, then make sure to do whatever the hell you want. And if you want to say something about this video, make sure to do whatever you want. And then also, if you're not subscribed to my channel, then do whatever you want. I mean, I'm just some guy. It's really just your world. I'm just living in it. Hopefully me living in your world helps you learn how to trade a little bit better. That being said, see you in the next one. Cheers.